Well, greetings, and let me welcome you to today's webinar. My name is Dwayne Butcher, and I'm going to serve as your host today. We have the great pleasure of hearing from Gene Cunningham, president of Gene Cunningham Consulting. If during the course of the presentation today you have questions, you can submit them using the GoToWebinar toolbar, and I'll be sure to pass those along to Gene. Well, let me introduce today's presenter. Gene is founder of Gene Cunningham Consulting and is internationally recognized as a pioneer in lean accounting. She is the former vice president and CFO of Landtech and Marshfield Doors. Gene is co-author of the acclaimed books Real Numbers, Management Accounting in a Lean Organization, as well as Easier, Simpler, Faster, System Strategy for Lean IT. Both books have been awarded the coveted Shingo Prize. So without further ado, let me turn things over to Gene. Gene?
Hi, good afternoon, everybody. Thanks for joining us for this webinar on closing the books each month. I know it's something that we all are experienced with doing and have processes that create numbers for our companies. But as with almost every other process in our company, we can use lean thinking to help us improve how we close the books too. So I'm really glad you've tuned in, and I really do hope that you will ask questions. We'll certainly I have some presentation materials, and if you have questions, and Dwayne, you want to interrupt, I think that would be okay. Otherwise, we could take questions at the end as well. Well, let's start with talking about some companies that have applied lean to closing the books, and kind of what kind of results have we started to see with that, and what really made it possible for them to achieve these results. Well, first of all, there's a wide variety of companies that are using lean to help them close the books, both private companies and public companies, as well as ones with single locations and multiple. So from very small companies to really super large companies, international listed public companies. So let me give you a few examples about them. First of all, this first company is a company that I was CFO at Landtech. We reduced our close cycle from 18 days to 1 day. It was a single location, and it was a private company. It used a team-based approach, and the team-based approach was that everybody in the accounting department was part of focusing on how do we reduce the time to close the books. And over a 4-year period, we went from 18 days to 1 day close, and the 1 day close was just routine. It wasn't like tons of hours and people working into the night. It was a regular work day. It was led by the CFO and the accounting team, constantly looking at, what are the entries that happen as part of the close and how can we do them differently. Constantly looking at it. We did have some Kaizen event type of activity, but most of it was every day and every month Kaizen. I'll tell you a little more about that. Second company is a private equity owned company, which has to, as many private equity owned companies, has to release information up to the private equity firm and with certain constraints there. This company was able to reduce the close from 10 days to 4. The primary approach that they used to make that reduction was to really understand all of the linkages within the accounting department and outside of the accounting department of when did information come in, what was done with it, who got it next, and really creating flow paths within the organization. It took about 6 months to go from 10 days to 4 days, and it was led by the controller of the organization. The next one is an example of a public company. It was an international company with locations around the world, and they went from closing the books in 10 days down to 5. Now what's really exciting and exceptional here is that this 5 included readiness to announce earnings to the street. So this was a full close, including the audit steps. They started with a 1-week Kaizen event, and we'll talk more in the next hour and a half about the Kaizen events for Close the Books and tips on organizing them and how to do one. And out of the Kaizen, they found some immediate improvements, but they also identified some things that would take a little longer. They created, within the Kaizen event, a one-year plan with key milestones. They had a plan to reduce the number of days down each quarter for their quarterly results, and they stayed on schedule because the plan was very specific, and it took them a year. And it was driven by the controller in this case, and but it got really great exposure because this company actually had traditionally been the second reporter in their industry. In other words, their main competition reported earnings before them. And when they finally got faster than their competition, the controller, the CFO from the other company called the CFO of this company and just went, "How did you do that?" So they were very excited about that. The fourth company was a private company, but it had a lot of legal entities. And they went from 11 days to 5 days. They did that in one Kaizen event. They identified all the changes they wanted to make. They did a great job of implementation within the Kaizen. And the very first month after the Kaizen, they did the close in 5 days and have maintained that. This was a really special played a big part in the results that they were able to achieve. And then last of all, as an example, is a public company, again international in nature, and they went from a 20 days that it took them to get their analysis book out. This is a very large Fortune 100 company, down to 10 days that they had their analysis book out. They used a Kaizen event approach with immediate implementation. In other words, they made changes within the Kaizen event that they were able to reduce their close to 10 days. It happened that very next month, and it was driven by the controller and the treasurer in combination. So there are a variety of ways that you can go about applying lean to improve your close to books, and I'm going to tell you more about that. But I thought you might like to start out with, what are some companies doing? Actually, just did another Kaizen 2 weeks ago, and the company went from 23 days to which they have a plan now to have their first level close within 5 days. So they know that that's just a first step for them, but because they're small enough, they should be able to do it a lot faster. But at least it's a first good step for them. What are some of the things what are some of the changes that we actually see within these companies that make these kind of dramatic improvements? I'm going to go through a bunch of specifics, but before we got there, I thought you might like to have some feel for, what are some of the common things between these companies? Well, first of all, they all used cross-functional teams. In other words, this wasn't just either the people that closed the books, and certainly in the large public international companies, it wasn't just the people involved with the close, it was people in the accounts payable department, the tax department, all the different elements of finance. And in the smaller companies, and even better, it included people outside of accounting. It included plant folks, engineering folks, it included, in one, as I showed, presidents. So if you can get to include people that provide information into the close process, as we all know, garbage in and garbage out, but as well as users of the financial information. So the more cross-functional the team, the more quality of improvement that I think you'll really find. Also, they all had clear leaders. In every case, there was somebody that was a champion that said, we want to do this. This is really important. We need to close the books faster. Here's our call to action. In some cases, the call to action is we want to free up time to be able to do other things. In other cases, the call to action is our business people are really wanting this information to do something differently. There can be different reasons for different companies, but it's really helpful to have a clear leader with a clear drive. Also, in almost all cases, process mapping of the close process itself was a fundamental part of being able to visualize what really are the steps that are going on and where is there an opportunity for improvement. Andon. Andon is a word that means lantern or signal. And an andon is, well, we use it often in our factories, and a lot of the things you'll hear today is come from our factories, learnings from the factory that we can apply in the accounting process. But the Andon is a signal that we use to indicate that something isn't going right. You know, when everything's going fine, it's green. It turns yellow when there's the first glimpse that we might not meet our timeliness, and the red is, hey, we're late. Well, we want to know when we're getting into the yellow as early as possible. I'll share with you some Andon examples within the close process. Also, metrics were a common factor in these close. Not just the metric of how many days did it take us to close, but how much rework was there, how many manual entries were required, how often were we hitting the schedule that we had put together. And then last of all, flow linkages. In other words, really being able to see that this information comes in, here's who gets it first, the next person is dependent on them, what's the quality level required. So flow linkages also common in all of the close the books Kaizen events. So these tools can be extremely helpful in identifying opportunities for time reduction. How about some of the types of improvements themselves? I mean, I can talk in generalities, but what I thought I would do this time is really share with you some of the common elements and how they were used within some of these companies. The concepts that I'm going to describe are in these areas, focusing on the customer and defining who is our customer, what are they looking for. Reducing batch size, just like we do on the shop floor. We know that the smaller the batch size, the shorter the lead time. So the same principle applies within accounting and closing the books as well. We do a lot of estimates within the accounting process of closing the books. We'll talk about that and how to manage those estimates. We're going to look at cutoffs. We're going to look at quality, just like we do at the floor. Instead of checking it at the end, doing all this work and then saying, hey, does this financial look okay? I think we all have this experience of waiting to see the numbers for the first pass so that we can find everything that's wrong and then, you know, fixing those things that look wrong. Well, we want to try to get quality at the source wherever possible. I want to spend a little bit more time on this right now. Quality at the source is really, really important. So many companies in the accounting department, you know, as accountants, we look at the numbers and we say, oh, this doesn't look right. This needs to go here in this account or that account, or it's got a unit of measure problem. Let's go fix that. Let's go fix the cost of sales and the inventory. And you know, this is one that I think can really be our best friend in close the books, is to get at quality of the source. It's hard to do, though, because for years and years as accountants we've thought of ourselves that really our job as part of doing the accounting is to fix those problems that happened at the source. I mean, we see it as our actual work. And so we want to try to change the thinking that the work is to find and understand why the problem happened in the first place and work on that. So this is a really important one. I'm going to talk a little bit more about it, but I think it's a very fundamental shift that we have to make to reduce the close the books, is that we look at some of this touch work that we do in accounting is really as a symptom of a problem, not as value-add work that we do. We're also going to look at visual management and some metrics for our workers. So let's dig into each of these a little bit more deeply. First of all, just like in the factory, we try to identify the demand rate from customers to figure out how to set up the pace and the capability of our factories in order to fulfill. And just like in order entry, we try to understand the customer's need on the phone and to get their order and put it into the system. And in product development, we try to figure out what kinds of products or services that our customers want and how can we provide them more effectively. It really is worthwhile to stop and think about who is accounting's customer. And one of the answers that I often get is, well, accounting is a customer. Well, it's kind of hard to be a customer of yourself. It really doesn't help you figure out what work that we do is important and which work is not important. So I think what I've tried to do here, and most of the literature you read about lean, it talks about the customer is important for us to figure out the value add and the non-value add activities. Value add being the products and services the customers are willing to pay for, and non-value add is things that consume resources but nobody's willing to pay for. Well, we want to take that kind of thinking and say, who really is accounting's customer? And it's very similar for IT and human resources and legal. While we may have some breakthrough directly to the end customers, for instance, within accounting, collecting the money, you know, we're going to have interaction with the end customer. So we have some connection there that the invoice is correct and that it's payable and that sort of thing. But a lot of times our customers for accounting, IT, and human resources are really the other parts of the organization that have a more direct connection to our end customer. So we want to think about these areas, product development, sales, manufacturing, service, others, as customers of the accounting information. What is it that they need it for? How is it going to help them make better decisions? Now, all businesses have, whether they're profit or nonprofit actually, have a requirement to be financially stable. And so sometimes people will say, well, the customer of accounting is the stockholder, it's the shareholder. And I guess it is to an extent. They depend on us to make sure that, you know, the information that they're getting is of good quality, it's consistent with generally accepted accounting principles, and that it's easy to understand. And they are a customer in that regard. But really, all parts of the company are serving shareholders as well. So anyway, we probably could barely say that we have two customers, maybe three, but the two customers are internal customers who are using the information that we're developing to help them improve their decision making. And then also the customer of providing information to our shareholders. So, but it's really important for us to think about who our customer is, because how we're going to use that is everything we do in the close process, we want to ask, who is the customer for this information? What are they going to be using it for? And so this is something that, you know, it's really important to kind of think about, because we want to make sure that we're not just doing things within the closed process and providing information just because it's there, but really because there's somebody that's going to use it. It was funny, one event with one company, I kept asking them over and over, you know, who's going to make a decision with this information, and the owner of the company finally asked the controller to put in every conference room a poster that said, what decisions will we make with this information, because they realized that they were generating so much information that no one really was using. So who's the accounting customer? The next thing we want to borrow from manufacturing is a reduction of batch size. And how do we do that as part of the closed process? Well, probably the most obvious ones have to do with your invoicing information as well as your costing information. For instance, we used to wait till the end of the month and then look at all the cost of goods sold entries to see if they looked right, and we'd look at the invoicing to see if everything, you know, got invoiced properly. Well, we decided to begin to reduce the batch size, and eventually got to on a daily basis, we would review everything that had hit the general ledger from invoicing, as well as all the cost information, either at the general ledger or the sub-ledger, whichever was appropriate depending on your system type, and make sure that they were right every day. Well, doesn't that take a lot of time, checking it 30 times versus checking it once? Well, what we found out was that if we checked it in small batches, in other words every day, we could see a problem and fix it before it became replicated during the rest of the month. Think of a unit of measure problem, for example. But another benefit was that if we could look at it every day, if we did see a problem, we didn't have to go through lots of days worth of entries to find out which day caused the problem, because we knew that it had to have been the entries that were entered that day before, a lot easier to find. So while we were doing the review 30 times instead of one, we found that the overall time was actually less. Plus, we had taken instead of looking at the 30 days after the month had ended, we only had one more day to look at after the month had ended. And so we were able to reduce the amount of time in the closing calendar related to invoice and cost review to just a very short period of time. In other words, we got it out of the closing window. And that's really important if you're trying to reduce lead time of your financial reporting. Some of the reduction will happen because you've actually reduced the amount of work, but some of the reduction will happen because you've moved it out of the closing window. If any of you have been on a setup reduction event at the shop floor, that'll sound really familiar. It's the very same concepts there as well. Another area of reducing the batch size has to do with how frequently you might upload from accounts payable, accounts receivable into your general ledger. Again, it's really the same sort of idea. The sooner that we can upload the information from different modules into the system and do them on a frequent basis, we can identify any kinds of problems that exist, as well as it gives us the ability to, with both of these uploads happening frequently, to actually create preliminary P&L statements throughout the month that might be useful for other purposes. So reduce the batch size. It reduces the amount of work, it reduces the closing calendar, and it begins to create information in your P&L format that you might not have otherwise. So I think this is a really good one to look at. Now, some of you may not have systems that actually are connected between the modules, and so you might really question, is it worthwhile to manually upload these on a more frequent basis? In that case, I would say if you're doing it once a month, first try maybe going to twice a month, or maybe going, then seeing how that goes. Is there value? Go to every week, eventually every day. So you don't have to go sort of like all or nothing. Just begin on the path of reducing the batch size and see where if you can find a sweet spot of improvement for you. Estimates before month end. I mean, this is a really great opportunity to reduce your closing calendar. It doesn't really reduce the total amount of work that you do necessarily, but at least it gets it out of the closing calendar. Because remember, we want to create financial information that the business can use as early as possible. If there's no emphasis to get the information early, really we should be asking, why are we doing it at all? The financial statement really should have a customer, people that are looking for it and wanting it. You know, we're all so used to getting information so quickly. If there's no pressure to have the close very quick at your company, that might be a whole other conversation of is the information you're producing meaningful at all? Anyway, let's go back to estimates. All of these areas, warranty reserve, bad debt reserve, obsolescence reserve, vacation accrual, maybe others within your company, all of these are pure estimates. These are not cash-based entries. They are generally accepted accounting principle type of entries, which, by the way, I'm a big fan of GAAP, so we need to comply with GAAP. But they are all, in fact, estimates. And what happens in a lot of our companies is that we wait until the end of the month so that we can get every single day of the month in as we do our analysis of what the reserve should be set at. And I would like to recommend, as I've done as seen and have done in companies I've managed, is that we don't wait until the end of the month to do these reserves. Let's do them before the end of the month. They're all estimates anyway. Either estimate a different window, maybe use the 20th to the 20th of a month and then do your reserve between the 20th and 31st, or 25th to 25th, or maybe you still start at the first of the month of the data, but you just estimate the last couple of days. But this is a good opportunity to take these out of your closing window altogether. One of the cutoff issues to really look at, and I see this really in almost every company that I help with this, is they have left their accounts payable cutoff to some number of days after the end of the month. So let's say you currently have an accounts payable cutoff on day 3, okay? Do we really think that all invoices for the prior month are coming in within the first 3 days of the month? Well, no, of course not. Well, what about day 15? Do we get them all in by then? No, we don't. Do we really want to wait, have our customers wait these days to get the precise accounts invoice in from our vendor? You know, we really don't want to. It doesn't make a lot of sense. It doesn't improve the accuracy. It might improve the precision of our statements, but it really doesn't improve the accuracy. I highly recommend having the month, end of the month, be the end of the month. Now, what we did, I know at first company where I did this, where I was a CFO, is what we did in January is that we looked at a normal grouping of accounts payable invoices that we would normally not see at the end of the month. So, you know, you've got some travel stuff, you've got some, you know, these are things that are going to hit your income statement. You know, you're going to probably have some, you know, utility bills, some stuff like that. You know, you can look at what's not going to be in there. We would accrue in January the amount that we thought would not come in January. We would let that journal entry ride all the way out through December. In December, we would keep the cutoff for December open longer for end of the year, and then we would reverse the journal entry from January that we had made in the prior January in December, so it would offset the longer accounts payable window being open in December. So we still had a good, you know, very clean, you know, as clean as any cutoff is going to be from an auditable perspective, but we didn't keep the cutoff open every month throughout the year. This worked really, really well. It's a level of precision that probably only the accounting team really cared about. The users didn't care about a whole lot, and it worked. It just worked really well. It kept us, enabled us to get information out much, much more quickly with the same really level of accuracy, maybe just a little less precision. So I think this is one to really look at what are you currently doing and what is the reason that you have for keeping your cutoff open longer. There should be a very specific reason to keep it open longer, in my opinion, than just, oh, we want to get some more of the invoices in. You know, cut it off, let it flow throughout the year. Excuse me. Another improvement that I think helps a lot of companies too is really sort of simplifying overall. Looking at all, just like the accounts payable example, looking at opportunities for simplification. So for instance, maybe your vacation accrual, I'll pick on it for a second. Maybe currently on a vacation accrual, you're splitting your payroll between, you know, anything that was holiday or vacation, it's going to the vacation accrual. Anything that was paid time goes to the department. And then you're making accruals for in your cost of goods sold for how much of your standard is for vacation and holiday. You know, that's even hard to explain. So, you know, maybe what you want to do is just have, you know, all pay go to its department, whether it's for holiday or vacation, and just accrue your vacation, you know, put in, you know, X dollars, you know, I'm just using an example, $10,000 a month for the year, and then true it up at the end of the year. Maybe look at it twice a year. In other words, look at these accruals on a less frequent basis if they're really not significantly affecting or core to your strategic profitability. Also, maybe simplify by using some templates, having some basic templates for your journal entries that you can just lay the information in every month and you're not recreating templates. By the way, if you're doing keying, actual physical keying of journal entries for anything that's routine, definitely want to look at, does your system have the ability to upload Excel spreadsheets? One company, for example, that was in my examples at the beginning, they had somebody whose job, she had another job most of the month, but during the close cycle, everybody gave her their journal entries, and she would key these journal entries in, and then somebody else would check them to make sure they were right. And within the Kaizen, they were able to find that they could upload their journal entries directly from an Excel spreadsheet. And one of the jobs that took 2 hours to key in. This had to do with the American Express journal entry, was now done in about 20 seconds. And you know, that kind of radical change, but do make sure and check to see if you can upload spreadsheets. The Kaizen 2 weeks ago, again, no, we don't have that capability. We go look, we go ask, we dig in a little bit. Oh, yeah, it does have the capability. So if you are actually physically keying, using templates is a good solution, or just going straight to an Excel upload, even better. Another way to simplify is to reduce the amount of precision that you're requiring of the accounting team. So maybe you say, you know what, if this correcting entry is less than $50, don't make it. Just leave it where it's at. You know, start to reduce some of the real precise elements. You want cash to be precise, but about everything else, you know, make sure you're not spending more on the precision than you really want to. Like, I'm interested in knowing what my miles per gallon in my car is, but you know, I wouldn't hire an accountant to run around with me to figure that out. So you know, take some look at how precise are you really driving your financials to be. Another really important thing, as I mentioned before, is quality at the source. I think that, you know, the 5 whys, again, that we use on the shop floor, that we use in other business processes, is extremely, extremely valuable and close the books. Every time we make a manual journal entry to correct a problem, we should be thinking about, why did this problem happen in the first place? One of the things that we did is we took some of the time that we were spending making small dollar journal entries and put that time into doing root cause analysis to really find out, why did this problem happen in the first place? Was it a training issue? Was the reference data incorrect that it was using? If it was reference data that was incorrect, how did it get incorrect? What can we do to make it so that this type of journal entry never comes through before? Every month after our close, we would do a review of every manual entry. What were they for? Were there ways that we could eliminate them, and which ones do we want to take to root cause? So the 5 whys, you know, to really understand why this defect was happening and really solve it so we don't see it again, should be a fundamental part of your ongoing improvement of your closing calendar. Here's some examples of some Pareto diagrams which I think are really helpful ones as part of the close process. First one to do is to take all the manual entries and sort them out by value, create some buckets. You can see the example here. And then tally up how many manual entries had those values. And if you're like most companies, you'll find that the majority of your manual entries are for small dollar items. And small dollar items are really not affecting very much the quality of your financial statements, but they take a lot of time, both in terms of the closing calendar as well as the people doing the work. So this could be a good exercise to go through as sort of a preparation for a Kaizen event to see, what do yours really look like? Another Pareto diagram that I think is really valuable, and this is really more of a trend diagram, but using a little Pareto aspects of it, basically counting up the total number of manual entries, and then of those manual entries, how many of them were correcting entries. And you can see in this example, if you attack the correcting entries, and as they go down, the overall time to close, there's a correlation there. Because correcting entries do take a lot of work. They have to be in, they affect other accounts that then have to be analyzed. So this is a great chart. I might recommend a chart like this that you post in your accounting area, that you monitor over time so that you can see, how are we doing? Are we actually making improvement or not? And how are we doing on getting rid of overall number of entries, but particularly correcting entries? Those are really defects of the process. The next thing we want to do is create a visual schedule. We want everybody to know, each team member to know what are their tasks. But even more important is, who uses, once I do my job in the closing, who uses the information that I create? At the second company that I mentioned that created these flow paths, there were people in the closing calendar that had no idea that somebody was waiting on their information. They just knew, hey, we're supposed to close in 10 days, so I have 10 days to get this done, without knowing that actually if they could get their information ready on day 1, somebody else could use it on day 2, who could use their information on day 3, and before you know it, the closing calendar is collapsing. So we want to make sure that we know who the suppliers of information are as well as the customers. One company we were working on the cost information specifically as part of the close, and the cost accountant was describing what they do at the end of the month, each task, and she said, oh, I get this report from shipping, and I make some changes on it. And then and before she could even complete it, the woman sitting next to her said, what do you mean you changed that report? I make it just for you. And it was great. They were able to spend about 20 minutes together. They lined out what needed to be on the report, and she never had to correct that report again. But what a great example of, the customer of this information didn't really even know where it came from. They didn't know who it was. It was actually a person that they could go and talk to when they have problems. And that's one of the great benefits of a Kaizen event, is that people really get to know each other, meet each other, understand the complexity of their jobs. The visual schedule also helps us to identify, just as I mentioned earlier, the Andon, what is happening that might cause us to have a problem. In a Toyota plant, the red light doesn't really come on very often, but that yellow light saying something's gone wrong that might get me off schedule is turned on all the time. I'm sure all of you have heard the saying, problems should be treated as gold. It's the same thing. Tell me early there's going to be a problem. Don't tell me too late. So we want to create a visual schedule for the close process as well. Here's an example of a close schedule that took the same idea of red, yellow, green. This was a company that was a division of a larger company, and they were having trouble meeting the 5-day deadline to get their reporting and their analysis in. And they called the folks in the lean office and said, hey, could you help us with this problem? And they had a Kaizen event, and one of the things that they did was to create an Andon board, a listing of all of the tasks that were to happen within the closing cycle, who was responsible for them, who did the information go to, when was it supposed to be done, and then they would use the red, yellow, and green. If something happened that it looked like they might be late, they'd put a yellow sticky on it so that the other team members, the supervisor, the controller, could go and get help and help that person figure out how can we get back on schedule so that it didn't affect everyone else. Now this tool worked extremely well for them, so well in fact that they then engaged their auditors to put their steps onto the calendar as well, so that that could be part of the overall process. It worked great. The organization that was spending tremendous amounts of spotty overtime. What is spotty overtime? It means if one person's working till midnight and everybody else went home at 5. They solved that problem. People, anybody that could help get rid of the yellow was involved with it until it was off. They were able to get their numbers done. By the 3rd day, they became kind of heroes. Well, it became a best practice for that organization. They had multiple locations. So they actually then put it on to an electronic version of the Andon board where they could put the task, all the different groups could use it, as well as locations that were multi-location that came into a common closing calendar. So usually I really like things in paper like the previous one. They're easy to change, they're easy to update, they're very visual, you can see it. Unless there's a reason to be electronic, I'd really encourage you to do it manual. I think it's much more impactful. People own it more. Only if you really have multiple locations, then maybe you do have to go to the electronic version. But really a best practice, and one that I would really encourage you to get up, even just to start even, so that people can see what really are the steps. So on some of those examples, I wanted to give you Sorry, getting a little dry mouth there. I took a little drink. Kind of a real-world example of a whiteboard during a Kaizen of some of the concepts that we've just gone over. Once and be done. You'll read that term, I'm sure, if you're when you read real numbers that you get for signing up for this webinar. But it's really the idea that any information anywhere in the company, we only want it to be touched once. We want it to be put in correctly and be done with it. That we see any time we need a multiple handling as a defect and that we want to get rid of it. We want to have small batches wherever possible. We want to have standard reports. You know, if you've got multiple locations and their reports are going into one location, get them all the same format. Make it easy to roll them up. Even if you don't have an integrated system, at least have the same format of the report so you can use the power of Excel to pull things together. You know, do some setup reduction, like I said, the estimates and things that can be done before the month even ends. You know, do some setup reduction. Make sure that the information that you're providing is for the customer. It's customer driven. You have customers that want it. Constantly be asking, who's using this information? Go for accuracy, not preciseness, and use visual management wherever possible. So I thought you might enjoy seeing sort of a real-world example of these concepts being discussed and creating a plan within a Kaizen event. Well, speaking of Kaizen events, let's talk about what does it take to have a Kaizen event for closing the books. It's a lot like other Kaizen events you might have had in your company. If you haven't had one, this might be new. The first thing to do is to get organized. You know, pick a date. And believe me, there's never a perfect time to do it. But don't do it during the close period. It's really asking a little too much of everybody, an awful lot of pressure. So pick a date. I would recommend that you pick at least 3 days. And if you can, go ahead and do 5 days, but at least pick 3 days for your Close the Book Kaizen event. Select your participants. Think of somewhere like 12 to 15 participants. Include some of your customers of this information, some of your providers of the information, and a broad brush of your accounting folks. If you're a small company, the same thing applies. You know, try to get a good group together, and because the more people you have involved, the more you can get done, believe me. Select your scope and objectives, and I'll give you some examples in a second. Get a big room. Don't get a small room. You're going to be together for 3 days. Get a big room where you got a lot of wall space that you can you know, spread out a bit and feel comfortable for 3 days. And get some supplies together like flip charts, sticky notes, a lot of markers. Make sure you've got what you want before you start. Sounds like a setup reduction, doesn't it? Then create your scope and objectives and create some boundaries. So here's an example. The scope is the monthly close of the books for the company. And in this particular case, you might ask about, is there anything that we don't want to include in this first time that we're going to have a Kaizen event? Well, in this case, you say, hey, I want to exclude the holding company and this brand new acquisition that we have. Or you might not exclude anything. You might have everything included. But think about that. Is there anything that we don't want to be working on? Then clarify, what is the beginning of the close process? Well, here's an example. They decided to start when all the modules were completed. They only wanted to look at after the modules completed by all the plants. But a lot of companies will start with, we're beginning with day one of the close. And what's the end point? And you might want to end with the first pass. You might want to end with this plant's done. But here's an example. Analysis of the monthly financials is understood by the business partners. So remember, the purpose of these is not just to print them. The purpose of them is to make sure that your users really understand them. So if you can think about understood by the business partner, it might give you a whole different perspective. For instance, there was a company I was talking, there was one guy who was real involved with the close. He was what I call the go-to guy. And I asked him, I said, once you publish the financials, do you know what kinds of questions that people are going to call you with? And he said, oh yeah, I know what they are. I said, well, why don't you give them the answers before they have to ask? I mean, that's your expertise that you are offering. Become value add. So think of it as understood by the business partner. Then create some objectives. Your objectives should have a good amount of stretch in them. These shouldn't be easy objectives. These should be an objective that's pretty much a challenge, that you really don't know before you start how you're going to get there. If you already know how to get there before you start, just go implement that. But you want objectives that are really a good amount of stretch. So in this case, reduce the closing from 7 to 4 days. Reduce correcting entries by 50%. 50% is a great lean number. If you can improve everything by 50% and then improve by 50% again and improve by 50% again, it won't take long before you're world class. Then set some kind of target for eliminating non-value-add activities. I like 15 or 20. Is there any magic to that number? No, not really, but set a target. Everybody likes a score. Give me something to go for and put it up, measure it as you go through your Kaizen event. Maybe create some metrics about how you're doing and adhering to the new process. Maybe you're going to have an action plan for future improvements if you can't get everything done in the existing Kaizen. And make sure you also make it clear that, the purpose of the Kaizen is to have some fun as well as to learn some lean tools that you might apply in other areas of the company. So these are just some examples of objectives, but I think they're pretty good for a close the books Kaizen. Then do a little bit of preparation before the Kaizen. The kind of preparation I'm talking about is to not spend time creating a bunch of stuff, but pull together what you have. For instance, make sure you've got copies of what the financial statement package looks like. If you're a public company, pull your 10Qs so you can look at, what is the end presentation of some of the information. Get lists together of your manual entries. Maybe take the last 3 or 4 months of closing and get the list of entries. What are they? And then work out your logistics. Where's my room? Who's bringing the food? All of that kind of stuff. Where, for your out-of-town guests, where are they going to be staying? During the event itself, you're going to follow I recommend following some standard work. You want to start with who the customer is and what's value add for the process. To do that, you'll want to start with creating a current state map of how you do the work, and then create a future state map. In other words, what would we like this process to be like? Maybe something like 6 months to 2 years in the future. Not right away, but where would we really like this to be? Once you have agreement on where you'd like to be, at least a general agreement, you don't have to have precise agreement, then begin to brainstorm improvements that you could make now that would move you from your current state towards your future state, and implement those improvements right away. Whether it's an Andon board, whether it's signs for everybody's office, don't bother me, I'm in closing, whether it's getting your, looking at your invoicing on a daily basis, whether it's changing your accounts payable cutoff. Go ahead and brainstorm, are those things right for you, and then implement them right away. Some things, though, will take longer to implement, so you want to really clean and clear follow-up from the Kaizen for anything that was not able to be done in any Kaizen. Now, Kaizen events, I think, should have standard work as well, and going through this process of current state, future state, brainstorm, implement are something you should do in every Kaizen in that order. Process mapping, and I mentioned this, we had a common element in all of the success stories. It probably looks like a process map that you've done in order entry or purchasing or maybe in manufacturing, but certainly in your other business processes. So you want to do the same thing with the close the books. And I think it's a good idea to sort of mark it off by days. If you look at those orange stickies, those were kind of the days of the close using the swim lane approach. Now, closing the books won't just be a Kaizen event, although it will certainly jumpstart you very fast. You really want to, do monthly process monitoring, continue to look for correcting entries, manual entries, do root cause analysis. You might identify that there are some additional Kaizens that you need in very particular areas. For instance, here's just sort of a laundry list of, other areas that you might say, hey, for us to really get to a one-day close, what we need to dig a lot deeper in a particular area. Maybe it's the invoicing process, or sales tax, or reimbursements, or legal reporting, or write-off process, etc. So, as you do your first close the books, it may drive you to do some additional specific Kaizen activity as well. Here's an example of keeping your metrics. This is what's called a box score. It's basically an 8.5 by 11 piece of paper with your key metrics that you have selected. We could spend another hour and a half on metrics, but these are metrics. They're not really just financial metrics. They're how is the process working, and out of the close process, you might have ones related to the number of closing entries, or excuse me, correcting entries, of course your number of days to close, your number of manual journal entries, and then just identify what were you doing the prior year, what is your plan for the next year, and then monitor every month how did we do on those particular metrics. So some of your close the books metrics might find their way onto your accounting box score. So what's the benefit of having done this? I mean, for the business, I think for public companies, getting your earnings release earlier is a very good sign of a quality company. Getting a better quality of life for all of your accounting team members, that you don't have this spotty overtime, and people are really joined together on getting the close done. Being a much better business partner, getting information to your customers much more quickly, maybe even a couple of times a month for certain information, maybe daily, and then maybe some other things less frequently, like a monthly close. Who knows, you may even decide you don't want to close the books every month. You want to wait until the end of the quarter and just have some indicators on a daily basis. I don't know. You'll have to find out what's right for your company. And it can really be the start of your lean journey within accounting. I think it's a really great place to start. When people ask me, I want to get lean going in accounting, where should I start? I think close the books is a wonderful place to start. As you have success there, creating this culture that we're going to look at everything we do and see how we can improve it, make sure that it's meeting the needs of the customer, that it doesn't have a lot of rework, a lot of defects. If you'd like to learn more about lean accounting, of course, for participating today, Lean Accounting Summit organization has offered a copy of Real Numbers that Ori Fume and I wrote together based on our experiences at Landtech and Wiremold. It was never intended to be experts, but to really share with you our experiences to help you think about what could work at your company. Real Numbers also will soon be out on Kindle, but currently available in hard copy. Brian Maskell, Bruce Begley's Practical Lean Accounting, a wonderful book about the cost accounting side, and has some great CDs in the back to help you get started. Jerry Solomon, Rosemary Fullerton wrote Accounting for World-Class Operations, a great example of applying lean financials where you've got a machine center and very long production times. Wonderful book. Jerry also wrote Who's Counting, which is really a novelette style, like The Goal and a few others, Andy and Me. And then also, I really like Thomas Corbett's book on throughput accounting. It's linked to the theory of constraints. It's not gap-based accounting, but it has some really great messages on simplifying your financial information. I'd like to start our question and answer period with Henry Ford's quote about the easiest of all wastes and the hardest to resolve are the waste of time, because it doesn't show up. Oops, did I lose you guys? If I did, I'm sorry. I'll get it back in just 1 second. Oh, there we go. Does not litter the floor like wasted material. My experience working lean in manufacturing as well as in the office and service environments, as hard as it is to do lean in manufacturing, it's so much easier sometimes than in the office. I mean, we can move equipment around. We can make it visual. I think even folks in manufacturing are used to being told what to do. But in the office, it's a lot harder. We're professionals. We learned our subject matter in college, and we're very proud of it, rightfully so. But it's hard sometimes to make change. And so it takes a very concerted effort to make change in the office. But when you do, it's just amazing. It makes it so much better. We're available to do things that are partners and our customers really want from us to help them understand the numbers, because believe me, it is challenging for a lot of people to understand the numbers of the business. And they'd much rather have us as accountants helping them figure out stuff than just churning away, doing journal entries. So I think Henry Ford's got it right in this regard. So let's take some questions. What would you like to talk about?
At this point, Jean, we don't have any questions, but if you do have a question, please submit them now.
Can we open the mic up? Would that be easier for folks? I don't know. It's up to you, Dwayne. Technically possible.
I can certainly do that. I'm going to unmute everyone's line, so if you have questions, feel free to ask away. Well, I can hear life out there. Do we have any questions?
Does anyone have any changes that you've made that you'd like to share with the rest of the group that's helped your closing cycle? Well, Dwayne, it sounds like we got a quiet group today, but we certainly encourage you, if you would like to be in contact, my email information is here. I'd be glad to answer questions, and I really appreciate your interest in Close the Books. I think it's a core place to start within accounting, and I encourage you, whether you do a Kaizen event or whether you begin to really look at all of your entries and see why they're being made and what you can do to reduce it. I really think you'll find it very fulfilling and worthwhile.
Okay. Well, Jean, thank you so much for your time and your insights. As previously mentioned, you are going to receive a copy of Real Numbers, so you can look for that shipment in the coming days. And again, Jean has her email address there, so if you do have any offline questions, please contact Jean. So thanks very much for everyone participating on today's webinar. Have a great day.